Hi traders, welcome to Admiral Markets. My name is Chris and I will review this upcoming week's price action and take a look at the US dollar and the pound trend that is currently going on, specifically at these four pairs. But first of all though, be aware that the video analysis is intended for global analysts and may not be suitable for everyone. Please find out more about details and conditions at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, trading for exchange is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer. My first focus is on the AUDUSD. I'm looking now at a 4-hour chart, and the reason why I find this interesting is actually because of the break that happened last week. I was looking for a break to the upside and a hook back to the same kind of breakout spot roughly on that trend line there, and we did get a bounce, so that was an interesting bouncing spot for that AUDUSD, and I think we can continue up to the next target. You can see the price managed to reach the -272 target of the swing high prior to the break from here to here. So the next target therefore is the -61.8, and that is at a price level about 79. So I think that there's a good chance of bullishness here on the AUDUSD, and would look for continuation of that. Now an entry, if someone didn't catch this bounce here on the 1-hour chart, actually, it would look like this. You can see that price went to the 50 fib, and we got engulfing twins, so perhaps some of you are in that trade. If not, then I think there are two things that could happen. Either a breakout above this level, could be good still, right above this, kind of like this hourly top for an upside, or, of course, still a pullback. Those can happen still, because we are getting some upside, but there's always these ups and downs no matter what time frame we look at, so we can get that pullback down maybe to the 77.50 before moving up again. That's probably the most interesting, I would say, from a reward to risk perspective, with a tighter stop loss, perhaps below this bottom, or even maybe below this bottom, but that's a bit tighter, of course, and more risky, therefore, because you never know how far price could spike down before it moves up. So those are potential ideas for stop loss and an entry if one is not in that trade already. In fact, for the breakout, pullback and continuation, the classical BPC up to the 61.8 target on the AUDUSD. On the daily time frame, it looks like this. You can see a lot of choppiness, then suddenly that one big bullish candle here trying to push. It is a bit of exhaustion here, but it's just a consolidation that is trying to bounce off these bottoms, I think, here, trying to find support. So I wouldn't be surprised if we get the rally up to what it could be the -272 target here of this swing high, swing low, or even the -618 target at 79.50. So I think we could see that kind of zigzag up to that, up to those targets, in fact, on the AUDUSD. I'll take a look at the other pairs in just a minute. First of all, though, be aware of all the great webinars we have lined up for this week. On Monday, Nana's going to take a look at weekly FX recap. Then on Wednesday, do you have the right trading habits? Then on Tuesday and Wednesday, we're going to take a look at moving averages and strategy. And on Thursday, a focus on practical tips for combating fear in Forex trading, with the emphasis on practical things, really elements you can use from day-to-day trading and not only just in theoretical concepts. All right, back to the charts, and you can see pound dollar pushing away in this very strong uptrend. It's been lasting for a while now, actually, all the way dating here to the beginning of June, and was great trades to the upside. Last week, in fact, I mentioned one right at 155 as price dipped down. I said that's a great reward to risk right in here, and look at the rally that happened last week, about 400 pips. So that was indeed a lot of space. That was one of the reasons why I like to trade so much, because I said there's a lot of reward to risk space here, and I think that looks as a good trade. So I can't deny it that it was a nice one. 400 pips in total, the movement to the upside. So very nice. Now continuation to the upside is likely, in my opinion. If you just look at this uptrend on all time frames, even on the weekly chart, you can see very strong weekly candle here, basically pushing through the top. So at the moment, the bulls are in control, and I expect that momentum to continue. Now, we do have a strong bearish momentum here, so we have to be careful of these targets, these Fibonacci retracement levels. So the next one, in my opinion, is the 61.8 at 162-ish. That could be a major level to be cautious of. All right, so that is the target for the moment to the upside. And of course, I could put fibs on this upside too to get more targets. For instance, here, let's see, 160.50 maybe to be careful of. But perhaps better is even this fib like this. And we can see about 161.50. All right. In any case, there's plenty of space to the upside for this week to continue, in my opinion, and looking for pound dollar to follow through. For the moment, though, I'm actually more interested on the 1 hour chart. I think that the intermediate target is 160. It's a psychological round level, so I think we have that potential to the upside. Then I would expect a correction back down, perhaps back to the same bottom at about 158.30, perhaps even a bit lower to 157.50 at max, I would say, before continuation to the upside. So something like this for the moment I think seems the most likely, and then upside all the way to that 162. That's kind of the pattern I'm expecting. Upside, then a retracement, and then a continuation to this upside. This does not have to be necessarily this week, all of that this week. It could be partly also next week. Depends how speedy things go, but roughly this is the expectations for this week / this and next week. Now, if price doesn't continue and it stalls, then I would still keep an eye on these fibs, by the way, 38.2, the 50 fib, at the same levels for a bounce to the upside, 158, 157.50, max 157.50, I would say, which is the 61.8 fib before the uptrend continues. The euro dollar has been quite choppy. It's, price action is very slow, very hesitant. That certainly has to do with the Greek uncertainty and the EU negotiations that are going on. So we'll have to see what kind of effect that could have. Probably will be a big effect depending on how the news events develop. Certainly that will have its impact throughout this week and next week. But otherwise, from a technical point of view, I think this is looking a bit like an ascending wedge at the moment. Price is trying to break through the resistance. If it does have some space to the upside. As long as it really stays above this support level, we should still looking at bullish potential, still looking at an uptrend continuation possibility, because price is clearly above support, and it has broken through this particular resistance line, the one I'm going to draw in red right here. All right. So from that point of view, even if it drops back here, it's still a bouncing spot anywhere, even above this trend line actually, like this, or even above this one. As long as it stays roughly below these bottoms, right? Above these bottoms, excuse me, above 112, it's still in bullish territory. So from that point of view, I would expect still a breakout to the upside to continue, perhaps up to 115, and then let's see how it reacts to that mid-level. It's also a top about here, 114.70. There's a small space to the upside before it reaches resistance. And from that point of view, there's not a lot of reward to risk to go before we slam into that resistance. So a small trade there, more kind of an intraday trade at best. It's better if it actually hooks back to support, then it could bounce, and there's more potential. Now, the dollar yen has been in a great uptrend, but stalled, didn't manage to break above 125 with a lot of conviction, not much convincingly, and then retraced very strongly, corrected back up. So what I'm expecting actually is a bearish zigzag, something like this, down to the targets at -272 target, for instance, or the -618. So that is what I'm expecting at the moment, and I would expect price to turn back up a bit at these targets, like 121.50 is the -272, and the 120.30ish at the -61.8. Now that analysis is invalidated if price actually breaks through the resistance line here, of course, and could be confirmed if it breaks through the support line. Thank you for watching this video. Hope to see you in the webinars this week, and make sure to take a look at all the great stuff that Admiral Markets is showing you through social media and the website. Thanks for joining, and wish you good trading. Cheers.